All right, guys, I hit the recording button, so don't say anything embarrassing.
Yeah, now. Well, just as a heads up, I may be reaching out again for our podcast. We're looking at different wholesalers that would be willing to just dive in on various aspects.
Awesome. Yeah, absolutely. We'd definitely be interested in that. How often do you guys do the podcast?
So we just wrapped up season 1.
Okay.
And it was trial and error, but I think we got some really good speakers. We had one on Medicare supplements and real estate, but next year we're going to try and gear more towards our industry. And we actually we had other financial advisors come on and just talk to us about like their area and what people need to know.
Gotcha. Love it. That's awesome.
We probably
All right, so it's 8 o'clock on the dot. I'm going to wait until 8:01 and then we're going to start. So if you're joining us now, just hang out for a second and we'll get going. All right. We have a few people logging in, so we're just going to give them a little bit more time before we dive right in.
Quiet time.
Quiet time. You can talk, Larry. Go for it.
Yeah, that's okay. I'm good with it.
All right, so for everyone joining us, we're going to get started. You have joined us today for a presentation on retirement plan options for small businesses and also the self-employed. So before we get into our topic, we're going to quickly introduce ourselves. My name is Elise Levy, and I work out of Reno, Nevada at Legacy Wealth Planning. We specialize in holistic planning for not only business owners, but individuals. So we'll help you on the retirement plan side, and then we'll also help you on the wealth management side and really help you prepare for the retirement of your dreams.
I'm Holly Henry. I'm a financial advisor with River Valley Wealth Management, and we have 2 offices. One is located in Hatfield and the other one is located in Paris, Arkansas. And it's my goal to empower others to pursue their financial goals through wealth planning and financial investing. And this webinar in particular, it hits home for me because I'm also a small business owner. So I have a short-term cabin rental, and then I also have storage units that I am the owner of. So I understand all the struggles that the small business owners are going through these days.
I'm Larry Elovitz with Redwood Financial Group in Dublin, Ohio, which is near Columbus, Ohio, for those who aren't as familiar. In Redwood Financial Group, we create a comprehensive individualized plan to help our clients work towards their short and long-term financial goals.
Awesome. Thanks, guys.
So before we dive into the seminar with details about retirement plans for small businesses and self-employed individuals, let me just provide some context and perspective as to why we even chose this topic today. So an AARP study in 2022 revealed that nearly half of the country's private sector employees between the ages of 18 and 64 didn't even have a work option to save for retirement. That's almost 57 million Americans. And one key thing that we have learned is that helps for retirement savings is payroll deductions, because employees don't have a chance to spend that money because it's not hitting their bank account. It's key payroll deductions, which is why we need to be providing employer-sponsored retirement plans. And it just gives their employees a better chance to succeed for retirement planning down the road. With that being said, there's not a lot of small businesses that offer 401k retirement type plans. So more than half, which is actually 58%, is considered that businesses are too small to qualify for a 401k. 32% say that they can't afford a match, and 24% believe that they are too expensive to set up and manage. And it's our goal today to break through some of the obstacles that may be standing in your way of offering a plan to your employee. For example, even a self-employed person can set up a 401k plan, but there are other things and options to consider, and we'll be getting more into that later today.
So you've invested a lot in your business already. So why should you consider adding a retirement plan? One of the most important reasons is that the tax benefits they provide can help you save a lot more, potentially providing both you and your business more security down the road. The contributions you make can help reduce your current income taxes now, and your retirement account will have the potential to grow and compound tax deferred to boost your savings. As referenced earlier, another important reason to add a plan is to support it demonstrates to your employees. It helps you reward your employees by helping them prepare for their future. Plus, the best talent is more likely to be interested in a position with your business if they like the benefits. It's already very competitive out there, so this is just another great benefit for you to attract top talent. Preparing for the future is why we're here today, so let's move forward.
All right, so the average monthly payment right now for Social Security in 2022 was about $1,669. That doesn't feel like enough, right? That's because Social Security was never meant to be the only source of income for retirees. It was meant to be part of a three-legged stool of income sources, Social Security just being the first leg. The second leg is supposed to be made of your personal savings and investments. That can include savings accounts, stocks, bonds, real estate, cash value life insurance policies, taxable investment accounts, IRAs, Roth IRAs, or anything that you set up on your own. And then the third leg was originally called the pension leg back in the 1940s when this term became popular. But now pensions are not as common as they used to be. So the third leg has become more reliant on company retirement plans, which is the reason why we're here today. Company retirement plans offer multiple advantages for both you and your small business. These benefits can help whether you own a business that employs dozens of people, or it's just you and you're a self-employed individual.
So we wanted to take a moment and show you this graph, especially for those of you that have younger employees, on why it is key for people to start planning for retirement at a young age. So when you look at this graph, the goal of this graph is to show how much monthly you need to be saving if you want to reach 500,000 by 65 years old. So the numbers on this chart show how much harder your money works for you when you give it time to grow. So if you look at age 25, you have to set aside $142 per month to reach the $500,000 goal at 65. But if you do not start putting money into retirement until age 55, if your goal is 500,000, you're having to set aside over $2,000 per month. Again, this is something that just needs to be reiterated to younger employees. And it's not all about the money, as you probably know. So the person who starts by investing $142 a month for 40 years before retirement probably just has a lot more peace of mind and a lot less anxiety during their career than the person who waits until they're 55 to start planning for retirement. But if you're 55 or older and you haven't started investing for retirement, that's okay. We'll be there to guide you along the way, but now is the time to start investing whatever amount that you can.
So why is it important to have a financial advisor as part of your plan? We like to say boots on the ground. We'll be the ones helping you get everything set up as far as the retirement plan. We'll work with you and the third-party administrator if one is needed to get it set up. Not only will it help with the investment strategies for the plan, but we'll help you and the employees with your individual customized investment strategy. We'll also make sure to get all of the accounts set up for you and the employees. We provide ongoing support, meaning we'll continue to work with you and the third-party administrator throughout not only the setup, but for as long as the plan is in place. We'll continue to work with you and your employees on your individual customized plans and meet with any employee at least annually if they'd like. We can always meet more often depending on the situation and what's best for each employee. Also, free financial planning is included. In addition to all the other benefits, we'll help create a financial plan for you and any employee at no cost. This can cost anywhere from $200 to $500 per hour or $2,000 to $7,500 as a flat fee. Not only will we help create this for you and your employees, but this will be something we'll update on an ongoing basis as we meet with everyone individually over the years, and things change in their and your lives. Many advisors charge retainer fees or subscription services for ongoing planning that can vary drastically, going from $600 to $40,000 annually, but are typically closer to around $4,000 per year. The plan will evolve with you and them over time as your lives change, and at no additional cost.
All right. So we've been talking a lot about retirement plans, but why would you need a financial advisor beyond your plan? Well, we help with planning for retirement. Your portfolio has to provide income for as long as you'll need it. There's about a 60% chance that a 65-year-old couple will have one spouse reach at least age 90, spending an average of 20 to 30 years in retirement. That's when your portfolio no longer has to get you to retirement, it has to get you through retirement. We also help you prepare for the unexpected. Although you can't predict the future, you can prepare for it. We've definitely seen the last few years how the unexpected can impact your financial future. A financial advisor can help you plan ahead and help stay on track. 84% of those working with an advisor said it gave them a greater sense of financial comfort during the most recent COVID pandemic. We also help provide emotional guardrails. Humans are emotional, and sometimes even more so when money is involved. During times of market volatility, it can be tough to keep your emotions in check and not let them drive your investment decisions. If you work with an advisor, they can help you develop a customized investment strategy based on your goals, time horizon, and risk tolerance. They can be there for your support and to help so you're less likely to react to the extreme ups and downs of the market. The last thing is they can also help you create a long-term financial strategy that's customized to you. There are so many different products and strategies out there regarding investing. An advisor can help you identify quality, diversified products, building a customized strategy that helps work towards your goals with your risk tolerance in mind, providing the knowledge and guidance to help you feel confident, informed, and in control of your future, communicating with you along the way to identify changes over time and to keep you on track. An advisor can also help by working with accountants, estate attorneys, and insurance specialists to create a comprehensive plan for all corners of your life.
So we have been talking about comprehensive plans and even financial planning, but some of you may not even know what a financial plan is or what it looks like. So these slideshows show a few examples of what's included in a financial plan, which typically is several pages worth of data that the financial advisor will go over with you in detail. So if you want to look at this chart, the chart on the left is a balance sheet that will show your net worth and how your assets are allocated. The top right picture shows what your portfolio will be valued over a lifetime. And this takes into consideration what age you decide to retire or what your goal is to retire anyways. And the final chart shows where the money will be received, whether it's through salary, whether it's through Social Security, and even withdrawals are taken into consideration too. Financial plans also answer the one question that we get on a regular basis. How much money can I withdraw each month and still not run out of money by the time I pass away? These financial plans help answer these questions accurately. And what we always recommend is try not to answer these questions by yourself. Have a professional step in to guide you and create a financial plan for you.
Awesome. Thank you, Holly. So enough of us talking. Now you get to hear from our guest, Dylan, who has given us the pleasure of talking today. Dylan is based in Atlanta, Georgia, and he's an internal sales consultant for John Hancock. He is responsible for sales and relationship development with financial representatives and plan sponsors in Arkansas, Oklahoma, and Western Tennessee. John Hancock Retirement Plan Services is a major retirement plan provider serving businesses of all sizes, from entrepreneurial companies just starting a plan for the first time to some of the largest organizations in the country. Dylan has been with the company for over 7 years. He earned his BBA in finance from Kennesaw State University. Outside of work, Dylan is an avid soccer fan, plays golf and bowling, and enjoys spending time with his wife and 4-month-old daughter. Thanks, Dylan, for joining us. I'm going to let you take it away.
Awesome. Thank you so much for the warm introduction, Elise. And thank you, Larry and Holly, as well, for having me on today. Really excited to be speaking with you guys. So like they said, I facilitate 401k plan sales. And in my role, I get to speak to business owners like yourselves every single day. And just like Elise mentioned, when we set up 401k plans, we not only set up 401ks for businesses that have employees, we also set up 401ks for self-employed people as well. And really, guys, the number one goal that we see most business owners setting up a 401k plan for is for tax savings. On the personal side and on the business side, you can save on taxes through a 401k plan. Contributions that are made to a 401k by the business, such as employer match dollars or employer profit sharing dollars, those are tax deductible to your company. And then contributions that are made to a 401k plan for the owners and the employees, those can be tax deductible to the individual on the personal side as well. So through customized plan design, you can optimize benefits for yourself, your employees, and the company overall. Now, what this chart that you have on the screen illustrates right now is some of the contribution limits from 2023 and how they compare to 2022. So as you can see from the top, on the individual side, the annual deferral limit is $22,500 that can be deferred from your personal income taxes going into a 401k plan. So that's money that directly comes off of your W-2 and reduces your taxable income. And if you're over the age of 50, you're actually eligible for a catch-up contribution. Since you have a little bit less time to prepare for retirement in your 60s or 70s, they give you an additional contribution of $7,500. So if you're over age 50, you can contribute up to $30,000 from your W-2 on the individual side. Now, as you can see on this, the simple IRA and traditional IRA annual contribution limits are much less than that. Now, that might work for your business right now, but a lot of businesses, as they grow, might need to upgrade to a 401k plan in order to defer more. And that's where a financial advisor is going to be able to help you with that. Now, really for the big news though, talking about how much we can get into a 401k on the individual side, the big news is that on the individual and employer side combined, any single person can save up to $66,000 per year through a retirement plan, through a 401k plan. That's $73,500 actually if you're over the age of 50 with the catch-up contribution. So that is a massive, massive chunk that you can get into a retirement account to save on taxes and also get you that much closer to being able to retire one day. But whether you want to max out your 401k plan, or if you just want to offer a competitive benefit for your employees, or if you just want to start saving a little bit more for retirement, we can customize a design for your 401k plan that's going to meet your specific needs. So if you can go to the next slide, please, Elise. What we have here is an example of a hypothetical business and how a 401k can be designed and structured a couple of different ways. So what we're looking at here is a business that has 3 owners and 8 employees. Now, each scenario that you see in each column shows their projections for a 401k and profit sharing plan combined in order to maximize the amount of money that the owners can get into the plan. So as you can see, although all of these plan designs have the exact same thing, which is a 401k with profit sharing, you can see that some of these plan designs are not as optimal for the owners. The one on the very right-hand side is getting a little over 88% of the total contributions going into the plan are going to the owners. So ultimately, we bring this up and show you this because this is really where Holly and Elise and Larry can help you. Because at John Hancock, we work together with your financial advisors to help optimize the benefits and create a plan that's going to work for you and your company's specific needs, depending on how much you want to save or what your goals are. And also, Elise spoke a little bit earlier about how many businesses don't offer a retirement plan because they might think that either they're too small or they just can't afford a match, or just because the plan itself is too expensive. I'll first just start by pointing out that no business is too small. As I mentioned earlier, even the self-employed people can start a 401k plan for their business. And the IRS is actually finally doing something about this now to incentivize small business owners to start a 401k plan. Recently, the Secure Act 2.0 was passed at the end of December. And a key provision in this act was the creation of tax credits for small businesses to start a retirement plan. Now, in some cases, this tax credit can be up to $5,000 a year for the first 3 years for running your 401k plan. Now, depending on your business, that could actually cover the entire cost of opening and operating a 401k plan for the first 3 years. This is really the biggest thing that the IRS has done, and with the creation of this tax credit is really incentivizing small businesses to open a retirement plan. But the reason that they came out with this is a lot of what we talked about earlier as well, is how the average American doesn't have enough to save for retirement, and that if they don't start saving until they're 35, 45, 55, they're going to have to put away more and more. So these tax credits are a great incentive that they're giving small business owners for starting a retirement plan, not only for self-employed people, but also for companies that have 50 employees or less. Now, the IRS isn't the only ones out there that are doing something about this and are trying to shorten the retirement gap here. But there's even some states and cities out there right now that are mandating businesses offering a retirement plan. I believe there's at least 10 states right now and a couple cities that are mandating retirement plans. Some are government sponsored, and some you can go to the marketplace with folks like us at John Hancock. But ultimately, we know that the retirement plan market can be confusing, and it is rapidly changing. Over the past 5-10 years, we've seen more regulation changes than we have ever since retirement plans came into existence, and they're going to continue to change. But that is why you really need a dedicated financial advisor like Elise, Holly, and Larry to be on your side, because they're going to be the ones to guide you through making a plan that's going to work for you now, and how that plan is going to evolve over time as your needs change and as your business evolves. So that's kind of what I wanted to cover with you guys today, and just talk about the main reasons people are opening a retirement plan, the incentives for you guys. Elise, Holly, Larry, is there anything else that you wanted me to cover today or you think would be helpful?
It's great. I just think the key takeaway is the power of a customized plan and what it can offer. So thank you for taking the time to speak with us today. Dylan, that was some great information. And we wanted to kind of keep this a little short and sweet, because I do think that the key takeaway is customized here. So this map shows the areas that we serve, along with our contact information. And please be sure to follow us on social media and save this contact information. We all utilize LinkedIn. Elise and we have a business Facebook page. We also have an Instagram Facebook page. You can find our contact information on websites, which will include our phone number. And the great thing with LPL Financial is we also have texting numbers too. We do also understand that business owners work crazy hours, so our hours can be flexible to meet at a time that is convenient for all of you. And then don't forget, because obviously we're on Zoom, that we have the capability that if you are not in our local area, we will gladly meet with you through Zoom if we can't travel to you quickly. But again, I love the idea of a customized plan, and it's something that we would be more than happy to help you all out with.
So start preparing for retirement today for yourself and your employees. Also, like Holly said, check out our side project, the Investing Advice Roundtable. You can listen to podcast episodes on Spotify and Apple, and videos can be found directly on YouTube. Our thanks to everyone for joining us here today.
Awesome. Thank you, everyone. That was great.